Gerry Cardinale built RedBird Capital into a powerhouse at the crossroads of sports, media, and private equity. From AC Milan to Paramount, partnerships with LeBron James and Dwayne Johnson, his deals fuse business with cultural momentum. Cardinale embodies a new breed of investor, transforming passion assets into lasting platforms of influence and growth.
Gerry, thank you so much. You are the first. Yeah, clap. I believe you're not just one of the first repeat BFD guests. You were actually the first guest at the first BFD in New York City in Chelsea.
Look at this crowd, man. It grew.
Yeah, it grew. And so one of the things you said, we were in part talking about you guys were about to relaunch the XFL at that point, and we were talking about sports and private equity and all the things that private equity is investing in. And we talked about the NHL and NBA, et cetera. You said at the time you thought that the NFL would be potentially the holdout. It would be the one that didn't need private equity, wouldn't take it. It is now, including in my beloved Patriots. What changed?
Well, look, I always go back when I hear that question to the definition of private equity. But you know, what changed is I think there's been this massive escalation in valuations, and there's a need for liquidity. And so, you know, given the ownership rules, you can actually, you know, sell minority stakes at control premium like valuations and still control the team. And so, you know, I think the NFL, I think maybe the way we would modify that statement from last time is that the NFL was going to be the last. They were going to see what everyone else does, and then they were going to do it uniquely their way. I think they accomplished that.
Your firm, RedBird, has refocused, might be the wrong word, but at least narrowed. You're no longer, or I believe, no longer investing or buying teams, more sports adjacencies. Is that accurate? And if so, why that switch?
Well, yeah, look, we never.
And I know you were always doing adjacencies. That's
Adjacencies. What he means by that is that, you know, my model, which we really started when we created the S Network 25 years ago, was partnering with teams and leagues and building terminal value businesses around those rights, right? And I still contend that basically is still the model. I think during COVID and over the last 5 or 6 years, we decided to vertically integrate and buy into teams, become the rights holder ourselves, and we did that with teams. We did it with leagues. And so, you know, at this point, I have what I consider to be the 10 pole positions that I want to build on. So we have a great investment in Fenway Sports Group. That's the only investment where I decided to make an investment where we were the junior partner to that team, but it was really in recognition of what John and Tom and Mike and Sam Kennedy and those guys are doing. I think they're top of class, you know, in terms of sports management and ownership.
They're not winning any playoff games. Go on.
But then, you know, look, we really became a control owner in a big way with AC Milan, and you know, we did relaunch the XFL, as you said, and then merged it with Fox's property to become the UFL. So we have our 10 pole positions in terms of sports vertical ownership. But what I'm more interested in, you know, frankly, is using those platforms to do a version of what we typically do, which is build businesses around those. And then obviously our core model, which is things like EverPass with the NFL, On Location, Legends, One Team, yeah, we'll build terminal value businesses.
If LeBron retires and does get a team in Vegas, do you want to be part of that?
Well, you know, we looked at that, and I'd just say that right now my focus is more on what the NBA is doing in Europe. And so given now, as that has evolved, when we first started looking at it, we didn't own AC Milan. Now we own AC Milan. So I think my focus is going to be on continuing to build out that part of the world and that portfolio, if you will.
One constant of pro sports is that the valuations keep climbing. It seems that every successive sale is higher. The Celtics get sold for a record. The Lakers get sold for a record right after that. We've seen it in the NFL. From your perspective, are these teams currently being valued properly, or is there no such thing because of the supply-demand?
Look, beauty's in the eye of the beholder, so, and it's a market. I'd say the commentary I've made around that gets mischaracterized. I'm long sports rights. I'm a sports owner, so I'm very aligned and long price escalation. I think the financials have to catch up to the valuations. So it's less about are the valuations right. You know, if somebody's willing to pay those prices, so by definition, you know, the market.
But does it surprise you that we're seeing so many private equity firms, either ones get formed for this purpose or maybe practices within ones? It's one thing for an individual who's, you know, wants to buy their hometown team, right? Values in the eye of the beholder. It's a toy to some extent. That's different for private equity, right? Because private equity is doing it. You said the financials have to catch up. Private equity shouldn't be waiting for the financials to catch up. It should be doing it because the financials make sense.
Well, this is the difference. You know, with the one exception, as I said, of Fenway, you know, I will never be a passive minority investor in something. I will only invest where I can control or shared control. And so, you know, RedBird could launch one of these funds, but the difference if we launch one of these funds is that the stakes that we will contribute into these funds are going to be where we have the hand on the ability to drive the financials catching up to the valuations. Right now, you know, from what I can see, it's just beta, it's just passive investing. And that's okay for a certain, it's just not what I do and it's not what I'm interested in. I want to go into these ecosystems and I want to partner with rights holders and help them, you know, professionalize their business. And frankly, you know, these things trade on a multiple of revenue. And look, I mean, I bought AC Milan on a multiple of revenue, but all throughout that, I said to myself, you know what, I'm going to buy it as a multiple of revenue and I'm going to exit as a multiple of cash flow. And in the first 3 years that we've owned AC Milan, we've been cash flow positive. It's the first time in the history of AC Milan that you've had 3 consecutive years of cash flow positive. It's first time in the first year that we went cash flow positive, our first year of ownership, it was the first time in 17 years they were ever cash flow positive. And so that's, and in that is not just a financial guy's view of this. In there, implicit, is the professionalization of these things. At these valuations, you know, these are multi-billion-dollar live event entertainment companies, and they should be driving cash flow and the revenue flywheel around that core IP.
If you have a team that is cash flow positive and significantly, that all the financials look good and everyone says that is an investment is great, and the team doesn't win on the field, is that a good investment?
You know, I've had this conversation with sports team owners, and I had one with a recent owner of an MLB team. And I said to him, which kind of owner are you going to be? Are you going to be an owner that wants to win the World Series? Or are you going to be an owner that's focused on improving the terminal value of your investment? And he said to me, I want to win the World Series. This was the team that I grew up with. And I said, and he said, if I win the World Series, that'll increase the terminal value. And I said to him, well, I actually disagree with you. I think what will increase the terminal value of an MLB team is not winning a World Series. It's lowering the amplitude and the volatility of performance so that every year you're in the NLCS, the NLDS, you're always vying for a World Series. That consistency is what will drive terminal value appreciation. Winning a World Series one year and then the next year you go into rebuilding and you're last and everything else, that doesn't really move the needle.
There's been some scandals recently in pro sports when it comes to gambling. Obviously, the NBA, Major League Baseball, UFC to some extent. From an investment standpoint, and clearly these issues are pervasive throughout, including in European soccer. Does that change any of the investment math? In other words, is there potentially like a kind of a rot underneath pro sports right now that could change? Because if it's not on the up and up, that's the one thing that could drive fans away if they don't believe that the product is actually a legitimate product.
Those are one-off examples, and I think, you know, the regulations and the oversight will make sure that those are just one-off examples. At the end of the day, you know, sports gambling, betting is great for fan engagement. You know, these predictive market models are really interesting. You know, it's all going to be about fan engagement. You're not going to have fan engagement if it's not on the up and up, as you say. So I look at those as one-offs, and you know that happens as these things go through these learning curves and these growth spurts. You're going to have stuff like that, but I don't worry about the integrity of the activity.
Last sports question for you. Early last year, you guys formed a collegiate sports platform with RedBird Capital. It was called Collegiate Athletic Solutions. Want to provide capial, operational expertise to schools, is in exchange for a cut of revenue. Is that still an active effort?
It's an active effort with not a lot of end in sight. I'd say that that ecosystem is continuing to evolve. They're continuing to educate themselves on capital and the needs for capital. I mean, it originally started because NIL got hijacked by the transfer portal, and it created holes in balance sheets for athletic programs and universities. It's been a huge learning curve for us. The thing that excited me about the collegiate opportunity is, you know, the 25, 30 years that I've been doing this, I saw coming together all in one fell swoop with college. And the opportunity for me was to use the entry point of solving holes in balance sheets to then work in partnership with athletic departments and universities to build businesses around their IP. Familiar theme, right? That's what I do. I think it's too much right now for them. So I think right now we've got to slow down, and I think the immediate, you know, goal is to provide a shorter-term capital solution, and then you know, gradually work towards, you know, some form of evolution in the way they own and monetize their sports properties. College, you know, the thing about college is that it's highly fragmented. There is no college the way there is a Major League Baseball or an NFL. And there's some benefits to that. Some universities, it's few and far between. You've got like the big markets and the small markets. You've got the major universities and the other programs. They would benefit tremendously with some level of coming together holistically. If they did that, as you know, I mean, college football, if it came all together, would be as big as the NFL.
Let's go to media, broader media. Your thesis seems to be, in part, that kind of Silicon Valley and Hollywood have operated separately for too long, and you guys got involved in the Paramount deal, the Skydance Paramount deal. How do you get involved in that in the first place? How do you and Ellison
look,
get together?
The way I invest is not to be transactionally driven. Most private equity guys, get a call, they do it, they look at a deal, and they fill or kill. We've known David Ellison for 15 years. We originally.
What did you know him from?
Just from my Goldman days, and then my partner at the time, Andy Gordon, who came over to RedBird and now is over at Paramount full time. Really had a long-term banking relationship with David. So we really had I'd been looking at that space in Hollywood for a long time, and I could never get comfortable investing in core Hollywood like that. It's a lot of other people's money. This thing on cash flow that I'm obsessed with. Nobody talks about cash flow. And this is before technology, this paradigm you just talked about really has come to the fore where, you don't have Silicon Valley and Hollywood talking to each other, right? So it was long before that, but I just couldn't get comfortable with this other people's money type paradigm. And so, Ellison was really the first one that opened my eyes and gave me the comfort to invest in that part of Hollywood. It's a family. They think about it the way we like to think about investing. They focus on cash flow and financial sophistication, but they also had obviously a technology background. And Netflix unleashed a supply-demand imbalance in Hollywood. So subscription video on demand, the underpinning of streaming, was music to a guy like my ear because you get your cost back the day you deliver a show to one of the streamers, and then you get a contractual return. So, that's not going to last forever, but, right now, it's kind of a seller's market. It's fantastic. And so that got me off the dime. Both, Ellison combined with, the streaming wars, meant that I could invest in a way that was risk managed, and the hits business, was much more manageable. That gave us a footprint or a foundation stone. Skydance has been a tremendous home run for us. We didn't have to do anything. But we like to torture ourselves, and and the world's not going to stop, And for me, I like to build, and so clearly right now what's going on is that there is a virtue to scale, and there is a need for content generation to partner with technology. Nobody in Hollywood right now does it, and what's interesting is I happen to think for the first time in my career.
But doesn't Netflix do it?
No, they don't.
How do you figure?
They don't. 70% of the shows that are on Netflix, they license.
Right,
and they don't own their distribution, right? AWS carries them, right? And so what we aspire to do is to actually own 100% of our content and also bring, be the distribution.
Wait, can I ask, when you say be in the distribution business, it's one thing, but I mean, somebody else kind of always owns distribution, right? You make a movie, the distribution kind of goes through distribution companies and theaters. You're on TV networks, you're going through cable companies, even the streaming, everybody uses some cloud service, whether that be AWS.
No. So in this case, we will use Oracle, right? And we will be able to make more content for half the cost. The efficiencies of partnering with Oracle and the way that we're integrating it into theatrical and streaming original content production has not been seen before. And so I actually think that this is the future. And frankly, the Silicon Valley guys, they think that they are the IP in the equation, no pun intended. I happen to think for the first time in my career, content has a chance to finally be king, but it's only going to be the case if it's got a technology solution attached to it. And they don't talk to each other, but that's what we're trying to do.
As an investor in this, I know you can't talk much about the Warner Brothers Discovery bid that Skydance is making, and others are bidding for different parts of it. But as an investor, correct me if I'm wrong, if Skydance was to win this, Skydance Paramount, you guys would your stake of the company would go down pretty significantly. Does that matter to you?
No, my metric. Look, my KPI is not raising funds. My KPI also is not, what you said. My KPI is having an investment and compounding it and continuing to, competitively differentiate. So that doesn't matter. Obviously, we're going to try to, it's hard to keep pace with these things. This is big game hunting, and so it's hard to keep pace. But we'll definitely, I'm betting the firm on this play, and I'm going to back up the truck as much as I can.
What role do you think investors, whether that be RedBird or others, if they buy into a media organization that's got news, what role, if any, should investors play in the actual newsroom and kind of the organization of the newsroom?
Look, there's a couple answers to that. Personally, I'm passionate about returning news to the truth business. Everybody talks about, CBS News was the home of Walter Cronkite and Edward R. Murrow. Everybody says that they want the truth business, but it doesn't really pay for itself, right? Everybody wants to turn on the TV and get, Rachel Maddow or Sean Hannity. And so, and investors, I look at news, and I hadn't seen this before, but once I started getting under the hood of news and the business of news, I realized it was intellectual property. It's great intellectual property. And you asked about gambling, and whether or not there's cracks in that because of bad behavior. Look, I think the integrity of news is all about the truth business, and what we can do as investors is find a way to have that pay for itself, and that's what we're going to look to do.
Do you think the Skydance Paramount deal would have gotten done had CBS not settled with Trump?
Yes.
You do. So that you don't think that was a
100%.
prerequisite?
No.
Fair enough.
Absolutely not.
I might just. Okay, fair enough. The other big deal, media deal recently you guys have been involved in, made news last week, you dropped the bid for Telegraph in London, which you guys have been working on for a very long time. Why drop the bid? That's one where we're probably not the right owner for that. I mean, that was a learning curve. I'd say that it just got too political, too politicized, and we really just couldn't get any transparency on the regulatory approval process. At the end of the day, the thing about that is that, I don't aspire to be the proprietor of a newspaper. I'm not buying a newspaper. My fund is buying a newspaper. My view of it is, going back to the point on intellectual property, is that the opportunity there is to transform a world-class 170-year-old cultural institution, newspaper, into a global media company rooted in great journalism. And I think similar to maybe what we talked about in college, that might be just a little too much too fast for the opportunity. And so I just wanted to do the right thing for the Telegraph. It seemed like there was too much noise around it, and so we're gonna go find the right owner for that, given in the current circumstance. Can I say, as you know, there was a bunch of reporting that you personally threatened to, and this is the quote, go to war, end quote, with the newsroom.
Yeah.
Did you say that? And if
Of course
so,
not.
what do you mean?
No, of course not.
You didn't say it?
No, of course not.
Does it bother you that was reported by the paper?
I have 4 or 5 journalists working full time at RedBird, so no. Did it what?
No, never mind. Final question for you, and this is our second final question, which goes to Paramount to a certain extent. What role do you think AI should play in content creation going forward?
Look, I'm a big believer in embracing change and embracing technology. AI, on the surface, it seems like it's a real threat. The reality is, the world's not going to stop, and AI is coming. So you have a choice. You can put your head in the sand, or you can embrace it. I think AI is going to be enhancing of content creation. It's got to be harnessed. And we have an AI division at RedBird, where our company, Artist Equity, that we founded with Ben Affleck and Matt Damon, is incubating, an AI company within it. So what I'm going to look to do is see if I can get talent from, the industry, like a Ben Affleck, and embrace and evangelize the positive aspects of AI, harnessing it for original content production. I don't think AI is going to write the next Good Will Hunting script.
It's funny. You and I discussed this prior to this. So I was curious. I went to ChatGPT and I asked it to write me Good Will Hunting 2. It gave me 3 different options of different. It was a little choose your own adventure. It was frustratingly good. I mean, it was like to the extent that if someone had handed that to you, you think, oh, that's not a bad script. Why don't you think it's going to write, if not the next Good Will Hunting, some next blockbuster film, or even not blockbuster, artistic, whatever?
Look, I think what you may see is the integration of AI as an efficiency tool, so that if Matt and Ben sat down and were going to write a second Good Will Hunting script, what they probably would do is write the treatise for it with their own original ideas, maybe feed it to the AI and have it, take what would have been an iterative 2-month process and condense it to 2 hours, and then jumpstart them. At the end of the day, we talked about this with music. I don't think AI is going to replace Robert Plant and Jimmy Page. I just don't think that's happening. And similarly, it's not going to replace Ben Affleck and Matt Damon. However, it has to be harnessed. It should be looked at as a tool. We will figure out, it'll evolve. But in terms of content creation, nothing's going to change the human element. I'm a firm believer in that.
Gerry, thank you very much.